right, let's kick things off with inflation in Nigeria continuing to decelerate now for a seventh month in a row now, 16.05% for the year-on-year headline figure. September was 18.02. We do see, though, that month-on-month inflation did rise. 0.93% was 0.72 in September. Food inflation, a lot of focus there, 13.12%. September was 16.87, so we continue to see easing on the food side. And then core inflation, when you take you remove volatile food and energy, 18.6 there. This is what things look like in terms of the trajectory of inflation. Your blue line, aqua blue, is your headline. Your orange is food. You did see food jumping a bit above headline there between July and September, but since then, the deceleration has continued. So let's have this conversation about how inflation is impacting different players in the sector, particularly in banking. So we're very happy to have Mr. Paul Abiagam, who is the Acting Managing Director and CEO of Coronation Merchant Bank. Welcome to the show, sir. Great to have you. You were at the Africa Financial Industry Summit in November. There's a whole lot going on there. But I guess before we jump into inflation, as far as the Coronation's place in the merchant bank landscape, operations so far this year, your outlook, give us a bit of a background for viewers.
So first of all, Rotus, thank you for having me. For us at Coronation Merchant Bank, our outlook essentially is very optimistic. We believe the economy is in the right path in terms of the reforms, and we're beginning to see the dividends of that. And that impact has also resonated with our own strategy in Coronation Merchant Bank, which is to be the most respected Nigerian merchant bank in Africa within the next 5 years. In our own strategy, we're looking at how do we deepen our footprints in our chosen market sector coverage. We have, along our different businesses, our corporate bank business, but our key strength and forte is our investment banking activities. So we're broadening our products and services there. We're also increasing our sector coverage, and we're also strengthening our partnerships with our corporates and our different stakeholders.
Fantastic. Hey, look, that is good to know. Operations are moving on. So what do you make, I mean, as a merchant bank, everyone's impacted by inflation. What do you make of these latest figures for Nigeria as far as inflation is concerned?
So a lot of effort has been made by government and regulators, so we need to commend that effort. We continue to see price going down, though at a slower pace, and that is good for all. What it bodes is that businesses, it brings down borrowing costs ultimately at the end of the day, and it encourages investors to bring more of their flows into the system. So what we see are opportunities opening up for the country now and in the future, and we hope price stability is maintained as this deceleration continues.
You're not a member of the board of the Monetary Policy Committee, but we're just getting, feelers from folks in the industry as to, I guess, the direction of the benchmark rate. It was cut last time, at the last meeting, to 27%, first time in about 5 years. Not asking for a prediction or anything like that. Well, how do you see the trajectory of the benchmark rate, I guess, going forward?
Like you said, only the committee members of the MPC make those kind of decisions for rate cuts or rate adjustments. The market essentially are hoping for some level of rate cut or a hold position. So you forgive me if I'm not able to take any, hedge decisions on that behalf.
Certainly. All right, now, as far as borrowing rates, because you're in the space, to some extent, a lender, of course, you got investment banking, corporate banking, and everything else. How do you see borrowing rates? Do you think, with I know it's only one cut over the last 5 years, but do you think that's enough for players in the space like yourself and so on to ease borrowing rates for your customers, lenders, and so on?
So when you look at the market, there's still a perceived high level of risk in the market. And this also affects the level of, rates you're going to be charging. You still have heightened risks in the market due to limited credit data. You have high cost of capital still affecting the market, even though rates are coming down. You also have structural bottlenecks due to infrastructural gap. All of these increase the cost of doing business. So in a nutshell for us, we are cautious in making those bets about bringing down our rates. So what we're doing essentially is to continue to monitor the market for those macro conditions before we make any rate impact or any rate decision.
I saw you. I was looking you up. I saw you. There was a Facebook post where you're talking about technology and the banking sector. Can you talk about, for merchant bank activities, how technology fits into your day-to-day activities and so on?
Thank you for that. So we've seen a lot of need to use technology to try and improve on our business, in our decisioning, in our operations, in our activities. From a product structuring point of view, technology has become very integral beyond the day-to-day operation. It helps us to make better insights and decisions in our risk management practices. It also helps us to improve on our collection, payments and collection, how we integrate the use of technology in providing services to our capital providers and, of course, the ultimate productive sector. Technology, without saying, is very important in today's banking world. With the use of AI, you can make better decisions, better insights in how you project your business going forward.
I mentioned that you were at the Africa Financial Industry Summit. That was in Casablanca. Arise News were there covering it. You had a panel on From Savings to Strategic Power.
Yes.
Can you speak on what that means for Africa's financial future and how that aligns with your mandate over at Coronation Merchant Bank?
So that is a very interesting outing. The mandate, the theme was savings, domestic savings to strategic power. And that also speaks about the next frontier for Africa. For us to build an Africa for the future, we need to start to build and leverage on the domestic capital within Africa. We need to start to have significant confidence in our institutions, build resiliencies in our structures such that we can attract and retain the domestic capital to finance our projects. Now, what you've seen over time is that there's always been a dependence by Africa, of course Nigeria as well, for external funding to fund our projects. Now, and these fundings usually come at a very high cost. So what the summit was trying to promote was the need for African financial institutions to start to leverage on the deep resource in terms of domestic credit that abound within our system, the need for harmonization of regulation, the need for us to be able to pool resources to be able to grow project finance from an African perspective. Who better than us to be able to fund our projects that will speak for our businesses?
Right, so you're looking within. So based on the takeaways from that panel session, I guess if you look at the key insights or policy shifts that can happen from there to shape Africa's financial future, what would you think there would be?
So there are three key policy shifts that come to mind based on the conversations had. One, we need to strengthen our domestic capital markets. The shift is critical because when we build our domestic capital markets, what it means is that we're going to be able to start to see a lot more capital flows within our borders, promoting long-term investment, long-term capital business growth. We also need to start to see the importance of harmonization of regulation that will promote this. What this ultimately does is to start to encourage cross-border flows within the African continent. And then very critically, we talked about digital integration, creating platforms that essentially connects savers, investors, and entrepreneurs across the ecosystem, across the African ecosystem. And when we're able to pool this funding, we're able to use it to drive for growth. We need to, as a policy shift, start to look at how do we trust African financial institutions with the reserves of nations. And doing this will build what we call, it will help to build financial independence. It will build confidence in our institutions. And of course, to do that, there needs to be some level of macroeconomic stability, credible policies, and of course, strong institutions. And when we do this, what it means is that Africa should be able to finance its own growth on its own terms.
Hey, incredibly important topic, and your panel is very, very, influential in terms of that conversation. So, with respect to how merchant banks like yourself, our Coronation, and others on the African continent can essentially move, or rather transform local savings into investment capital, how does that transition work?
So for merchant banks, one of the things we are doing in the last couple of years is to leverage significantly on our investment banking franchise. Essentially, what we're doing is providing sectoral expertise in the private sector corporate as well as the public sector corporate in our different offerings and services, one of which is advisory, structured finance, mergers and acquisitions, and all that. So what we do here essentially is to bring those expertise in terms of origination strength. We also bring our sectoral expertise to bear in providing that bridge for accessing cheaper capital, providing that bridge for providers of fund and investors in the productive sectors of the economy. So what we're doing is essentially pulling together institutional and retail credits towards viable economic assets, which will build the nation, which will build the economy, and of course, at the end of the day, we achieve some level of nation building.
So as we talk about this savings to investment capital transition and this wider conversation around sovereignty or rather genuine financial sovereignty for the continent, the steps needed to get there, are you confident? And by the way, when we talk about sovereignty, we're not saying we still don't want foreign capital, right? We still obviously want foreign, right? Yes. Okay. Anyway, so but I guess we want to be more independent. So are you a believer that those steps can actually get the continent to that financial sovereignty?
I'm a very strong believer in that. I believe in homegrown solutions. And that solution essentially is having the confidence in our financial institutions today, meaning African government trusting financial institutions with managing the reserves for this country. In doing that, we're going to be able to unlock liquidity. We're going to be able to provide capital beyond the traditional pension funds, insurance pool of funds. We also will now have sovereign funds investing in local opportunities. And this will drive for growth. This will ultimately give businesses in African continent the opportunity to be able to grow commensurate to their counterparts across Europe at our own terms.
Fantastic. All right, final question for you. I guess just looking ahead to 2026, what are you going to be? I mean, we started out with you talking about your bank and your operations and so on. I guess going into the new year, well, what are you going to be focused on? More on the same expanding operations, or what's
So for us in the new year is leveraging on the key opportunities that we see in the investment horizon in the economy. The economy is on a rare trajectory. We're beginning to see forays of interest from foreign investors looking for partnerships. We'll build on that, continue to improve our business in our journey to becoming the most successful Nigerian merchant bank in Africa.
Great stuff. I really appreciate you taking the time to talk to us, Mr. Paul Abiagam, Acting MDC of Coronation Merchant Bank. Thanks for your time.
Thank you for having me.